Fresh and Fit Money Clips. Subscribe now and dive deep into the world of cryptocurrency with Myron, Fresh, and special guests Charlie and Miguel, aka Dollar Cost Crypto and Cultivate Crypto, in this exclusive Fall 2022 Money Monday episode on the Fresh and Fit podcast. Explore the latest trends and gain insider knowledge from their exclusive course. Don't miss out. Tune in now and stay on the cutting edge of crypto with Myron, Fresh, Charlie, and Miguel on the Fresh and Fit podcast Money Monday show.
I want to introduce the special guests on the show. As you guys know, we got Charlie and Miguel in the fucking house. Good friends of ours. We're happy to have you guys here. Who wants to introduce himself first? We got one guy in the studio.
All right,
in the studio guy.
I guess I'll be on the side. What's going on, you guys? I'm Dollar Cost Crypto, aka Miguel. What's going on, you guys? Once again here on Fresh and Fit, man. Hell yeah.
Looking suave as ever, man.
As always.
Yes, and the watch.
Has the rollie as always. So.
And Miguel, Charlie got a new mic.
Yeah, Charlie got a new mic
and camera.
Yes, sir.
Lens.
Yes, sir. We're getting going here.
So, Charlie, can you introduce yourself to the people, bro? Because obviously we know who the hell you are, but they may not.
Yeah, exactly. So my name's Charlie. I'm on Cultivate Crypto here on YouTube. We do the crypto mindset course, which is basically the best course in the cryptocurrency space to help brand new people get into the space and become successful, as well as helping people who are already in the space basically fill the holes that they need to fill. Some of the things that we cover, three of the big points that we cover in the course are technical analysis, fundamental analysis, and then on-chain analysis. So those are kind of the three quadrants here within the crypto space that if you can master or at least become competent with those three areas, you can do very well. So yeah, we've been giving out this information for free on YouTube since 2019. And yeah, we've been doing it here on FreshandFit since I believe early last year. So yeah, it's good stuff.
So, real quick.
Speaking of dates,
yeah, man,
looking good for your dates. Today's sponsor is TJ Lee, guys. If you want to go ahead and make sure that you don't have cold ass leads like our boy right here that's calling from a blizzard, and you want to have some good skin when you show up for the date, make sure to get some TJ Lee, guys. Probably one of the best skincare products is for men, right? It's retard proof, as I would say. Oh, I shouldn't have said that. It's fine.
Well, it's dummy proof, guys.
Easy to use.
Yo, it's easy to use, guys. It literally comes in with the day and the nighttime instructions on there, because you're gonna have obviously a day and a nighttime routine. It comes with a moisturizer, super serum. I like the level 3 because it comes with the daytime moisturizer, nighttime moisturizer, super serum for your skin, right? And eye circle, and they also kind of have eye cream. So you can get rid of those like dark eyes. If you're not sleeping and shit like that, it'll help with minimizing that as well.
Super late, so we need that.
Yeah. So, yeah, man, it's really easy to use. Good skincare. Has the whole routine. It comes in a box, nice and simple. You get a re-up, every month or so, depending on how often you want it. But yeah, man, guys, you got to take care of your skin, man. If you don't take care of your skin, it's a big sign of your vitality, man. If your skin's all fucked up, people are going to assume something's wrong with you and you're fucked up. So, guys, take care of yourselves. This isn't just about getting in shape in the gym and looking good and getting your teeth clean and everything else like that. Your teeth is also, your skin and your teeth are a huge representation of your cleanliness and your hygiene, man. So you got to stay, nice and smooth with the skincare and take care of it with some Tiege Haley. Get handsome, you know what I'm saying? You're tired of looking ugly, looking like shit, go ahead and get some goddamn Tiege, all right? All right, cool. So, I guess Miguel or Charlie, one of you guys could take it. So crypto's been on a dip. Everyone's, oh my god, crypto's going down. Yep. Oh my god, people jumping off of fucking balconies because Ethereum went down to like $1,000.
Yep.
Bitcoin for the first time in a very long time, I saw it go under 20,000.
Yeah.
As everyone's panicking, I was buying up Ethereum.
Yep.
But some people may not have the same resolve that I do. So you guys do. Can you guys kind of explain what the hell has been going on? Why has crypto been dipping, and what do we foresee in the future?
Yeah, for sure. So what's been going on lately is basically there's been kind of mass liquidations. So there was a bunch of large players in the crypto space that borrowed billions and billions and billions of dollars, and because of the reputation in the industry, people just gave them blank checks without even checking like their financials. So So it was like a big liquidation. That was Three Arrows Capital. They were pretty much just saying, hey, yeah, we have $6 billion under management. Lend us like $500,000, $400,000, $1 billion. I think one entity ended up letting them borrow about $2.3 billion with basically like no credit check, no problem, no income statements.
Wow.
I mean, and just because their name was like they were pretty much one of the oldest VC fund, like native crypto VC funds in all of crypto, and pretty much everyone was like, yeah, for sure. I mean, Three Arrows Capital got it like that. So they were just giving them.
It's like the real estate crash in 2008 almost. It's like just you're alive and you have a pulse. We'll give you a loan. Okay.
So as they started getting liquidated, pretty much what kind of started taking the market down is like all these players started buying like fake Ethereum.
Okay.
Yeah, they started buying something called like STETH, which is basically a derivative of regular Ethereum. It just it pays you the yield that, you know, I was talking about the merge happening and like how you're gonna be able to make money on Ethereum.
Yes.
Well, these guys wanted to make that money now.
Okay.
Start making that yield now. So they're like, oh, this thing is safe. And, you know, the contracts were safe and everything. But the problem is all these big players put, you know, billions of dollars into STETH. And what happened is when one of them started running for the exit, no liquidity. So then the prices just started collapsing, and then since they all borrowed money because they all thought that BTC, even like all the large players in the game thought BTC was going to hit over 100,000, so everyone was long. And then as the price started coming down, these guys just started getting liquidated, and then that when they get liquidated, they have to sell all that Ethereum that they borrowed on. So if they lend me $400 million, I put $100 million of Ethereum as collateral, and I'm 4x, 5x long. They have to sell that $100 million of Ethereum on the market like that.
Can you explain what like being 4x, 5x long means for people out there that may know?
So it means it's like you're borrowing on so you put so being 4x long means that you're putting you're getting 4 times the money you're putting in as as extra leverage.
Yeah.
So it's leverage. So if I have $100 million, $1,000 down on this crypto 4x long, it's like I really have like $5,000 to $4,000.
Okay.
And then if it goes up, I keep the extra, but then I have to pay back the loan plus a little interest and stuff.
Okay.
That's
so
what it
for
is.
my real estate guys, that's no different than putting 20% down and the bank giving you 80%. It's the same shit almost. You're going 4151 leverage, whatever.
Yep.
Same thing essentially, where you're putting down this much amount in cryptocurrency, I'm assuming, and then you're getting that back.
Yeah,
a loan on it.
Yeah, a loan on it. Yeah, but instead of it being locked up in the house's value, you have it all liquid there, but only on that exchange. But here's the problem: is if the price. So if you're 5x long, just as an example, if the price goes 20% down, you lose all your money.
Okay.
Whoa.
Yeah, it's just 20 because they're letting you borrow 5 times on your money. So like 5 times 20. 100. So if you so they're putting $100 million down, they're getting $500 million of crypto. They're buying on the market, but then if their position on whatever they goes down 20%, crypto goes down a lot. It started this whole thing where boom, guys who were borrowing at 10x got liquidated, then 8x, 5x, 3x. 2x, and eventually some of the and then as that's going down, these guys started adding more money to the loans, trying to keep themselves from being liquidated. And then so it became this whole thing where like whales in the crypto space were pretty much trying to liquidate people. They're like, oh shit, we're trying to get this guy, that guy. I mean, even Elon ended up freaking selling because he started getting scared. Yeah, Tesla, I think Tesla sold like 75% of their Bitcoin position at $28,000.
Really?
For BTC, yep. And then it's pretty funny. He was saying diamond hands like the day or two before, and then he's like, no. Then it came out that pretty much he sold most of the Bitcoin stack.
Wow.
Yeah.
So okay, because if you guys remember, he was the one that like originally put like BTC to the moon or something like that, and it just flew up into the $60,000 range.
Triggered an alarming rise in terms of people buying Bitcoin. So that's crazy.
Yep, it made the normies actually get off their asses and buy Bitcoin. That's really what it meant. And that's why I look at it like, because people on Twitter, like, oh my God, Elon Musk is buying Bitcoin. I must buy it too. And it just went crazy. What's your thoughts on this, Charlie?
Yeah, I agree with that 110%. I mean, Luna was one of the first over leverage platforms to kind of create that cascade to the downside. Celsius and Three Arrows Capital were next. Voyager as well. There's other potential firms which could experience bankruptcy that are still around the corner. Some centralized exchanges as well. So there's, that's within crypto. If we want to go outside of crypto, right, talking just about the interest rate hikes throughout this year from the Federal Reserve, as soon as they announced those interest rate hikes back in, I believe it was December of last year, crypto started going to the downside, and that's the current correlation with the S&P 500 essentially. So right now, those two have been extremely correlated throughout the entirety of this year, whereas in periods in the past, they've been somewhat correlated, but not as highly as they are right now. So with basically the interest rate hikes taking down risk assets across the board, right? There's nothing really safe in markets right now. Even cash isn't safe due to the high amount of inflation. So, basically that started the fall, and then these liquidations, once we got to, I think it was around the 28K, 30K mark, essentially like made that fall a little bit more rapid into that 17,500 low that we got about a month ago. And we've been recovering from that decently well. And so I think
we're sitting at around 22, 23 right now, right? If I'm not mistaken.
Yeah, we're at about 23,000 right now on Bitcoin, and then on Ethereum around that $1,600 mark. So Ethereum's basically almost a 2x from where the low was. I think the low was about $880 so far, right? And so the next thing to look for now is, I think Miguel alluded to this at the beginning, is essentially the next Fed meeting, which will be on the 26th and 27th of this month, right?
That's key.
Exactly. And one interesting thing that we saw was the last 2 or 3 CPI, basically talking about consumer price index. When those numbers came out, we had a dump in crypto. But the last one that we had, which was on July 13th, we dumped down about 15%, which is kind of like a normal week in Bitcoin. It's not really that abnormal, but it was 5 days of consistent downside right into that date. And then from there, things started pumping, which was kind of interesting. So that was a little different from the past. So we'll see. Okay, we expect a higher interest rate hike again, right at the end of this month. I expect going into it that we get some dump in the price. But the key thing is there's a support level right now around 21,000, which is if we hold that area into the end of the month, going into the 28th, 29th, 30th, 31st, just a few days after the Fed meeting. If the interest rate hike is high and crypto holds above that level, Bitcoin holds above 21K, you don't need to worry about the price for Ethereum, because basically if Bitcoin holds that level, Ethereum will hold its level as well. And that will be an opportune time to buy. And everybody will be saying, screaming bloody murder, it's going to go lower, it's going to go lower. And we may get basically a bounce here where we have like somewhere between 20 days to almost a whole month of prices going up into the end of August or middle of August. So we'll see how that rolls. But if we don't hold that 21K mark and we start testing that 20K mark, and especially if we go anywhere below 20K around the time of the Fed meeting, wait, because prices will more likely to make a new low below that 17,500 mark, or maybe at least equal it. So you'll get, there is a chance for below 20K Bitcoin again, and that would be below $1,100 Ethereum in that case.
Okay, so question for you, because you threw a lot of things out there and I didn't want to interrupt you. So CPI, Consumer Price Index, some people in the audience may not be aware of that and how it affects cryptocurrency in itself. Can you please explain real fast how the Consumer Price Index what it is and then how it affects cryptocurrency? And then we can also talk about the Fed and interest rates too, just so people kind of completely understand. Because we could say all day, interest rates are going to go up. But, I think if people understand why interest rates going up affects cryptocurrency, they'll be able to understand better, and it'll make more sense to them why they need to get into this goddamn course. Because
I'll talk about CPI and then I'll go into the federal fund rate. Awesome. Okay. So what CPI is basically it's basically a list of things that the U.S. government looks into in terms of, it's like eggs, milks, the price of rent, basically insurance. It's an entire list of things of essentials that people need to kind of live their lives, basically. Mm-hmm. The last CPI number that came out, the one before this one, was about 8.6. The last one that came out, I think on the 13th, Charlie said, it came out as a 9.1. So they're even there because the numbers are pretty manipulated, right? I mean, we all know that the government lies a lot, right? So they're
understatement.
Yeah, understand, right? They're saying 8.6, and even in their crooked numbers, it went up to 9.1.
Yeah.
So even like the Fed just increased the federal fund rate by 75 basis points on the last one, and everyone was so shocked by that. It was like, holy crap! In real estate, it got more expensive to get into real estate, borrow money, and everything, and the reason they're doing that is just to lower the inflation, because every time they increase the rate to borrow money, it makes it kind of destroys money in a way. It makes less and less. It makes the monetary supply tighter, but it did nothing. the inflation rate still kept going up. So what happens is when the Federal Reserve meets later this month on the 26th and 27th, that's why we have the sales window exactly how it is. So we're able to get guys into the course and kind of hold their hand and tell them, hey, you guys, we're going to see which way this blows. And then from there, we start allocating capital into the market. Every single asset. So, okay, once we had 2008, right? Once you get past the whole 2008, damn near every asset class, the main ones, stocks, crypto, housing, it all went up. It was we pretty much went on from 2009 to 2022 bull market, straight up 12 years of a freaking bull market. Damn. So every time we get the correction down, right? So when there's this classic quote, when there's blood in the streets, that's when you invest, right?
When there's blood in the streets, it's time to eat.
It's time to eat. That's right.
I mean, look at the sentiment of that guy in the chat earlier who put that super chat in the beginning of the show. When people start saying crypto's literally going to zero, time to buy.
That's when you buy. You know what I mean? That's like just a low IQ, bullshit. When people, they probably say that so that they can go ahead and buy it when it comes low. Oh, it's a scam, and then they go ahead and buy up more of it. But, just like all the big banks that said that crypto was a scam, but then you find out that they were the ones investing in cryptocurrency the whole fucking time.
Right.
So, sorry, go ahead.
No problem. So that's pretty much the gist of CPI. So it's basically how the government tracks inflation, pretty much. Like, crap, stuff's getting really expensive. Here's the crazy part. We all know that number's bullshit.
Yeah,
right?
It's actually more. If you look at shadow stats, it's actually closer to 20%.
Right. So that means from the beginning of 2022 till now, we have lost like 20% of our purchasing power.
Yeah.
20% of that means your dollar buys you less. Look how much gasoline went up.
Here's another thing too. The U.S. dollar, this is the scary part, guys. The U.S. dollar has been going up, while all the other currencies have been sinking. I think for the first time, are we still 1-on-1 with the euro?
Yeah, we're really close. I think euro's just
almost 1-on-1 with a euro.
That's insane.
That's crazy to me.
Damn.
Like, I remember at one point the euro was damn near $1.50.
Yeah. Dude, I remember
euro.
when it was $2. When it was this is a long ass time ago. It's back like 2003 and shit. Like when we were going to war with Iraq. Yeah, it was closer to like $2 almost. So I mean, right now the U.S. dollar is the strongest currency. Yep. The yen is dropping, plummeting all over the place. And surprisingly, the Russian ruble. Yeah, pretty damn good.
Right.
With all them sanctions, huh? Vladimir knew what he was doing. That's a little bit more of a controversial take, but the point I'm trying to make here in general is that, guys, I mean, there's a lot of alarms going on here. The U.S. dollar is going up, inflation is still going up. Cryptocurrency is going down, but the Fed is going to increase the rates, and I think there's going to be a dip, and it'll be a good time to get in.
So let's say I'm the average guy, right? Okay.
Yeah,
I want to know things are happening here. I'm panicking. I don't know where to go. A recession might be on the way. Where should I start in crypto? Should I even get involved with it? Like, my thing is, look, at the end of the day, man, we're scared. We don't know what's gonna happen in the future, but we do know the interest rates coming is gonna raise in height. What should a guy do basically to get started, I guess?
Right. So the first thing is get into Crypto Mindset Quarter 3, right? If you don't know what you're doing, get into Crypto Mindset Quarter 3. I mean, the reason we have the course where it's at right now is to actually be able to help the maximum amount of people, hold everyone's hands through this crazy time. And there's a reason too. There's a rhyme to the reason why we have the course coming. We start selling it now, and then we don't have classes start until August 6th. Is that we're basically putting the courses in a place where we know what's kind of going on for the next 2-3 months for the next quarter, and then from there we're able to kind of dollar cost average into the market. So for a new person, like the number one problem people have when they get into crypto is that you're going to get finessed.
Right.
When you first get in, if you don't know what you're doing, you're going to get finessed. You're going to accidentally send Ethereum to the wrong address. I mean, there's stupid. There's all these beginner mistakes. Like the 80% of the times you're going to lose money is just right in the beginning. The first 2-3 months into crypto, because you don't know what you're doing, you can fall for a scam. You can send the crypto to the wrong address. You set up a fake MetaMask. You set up a fake Trezor wallet in terms of cold storage. You pretty much can get scammed. So that's one of the things that we teach people is we get them to the point where like they're not making any of the beginner's mistakes.
It's a learning curve. If you don't know what you're doing, you're going to fall off the curve.
I'll tell you guys from my personal experience, the first thing I did was I did a consultation with Charlie, and Charlie told me exactly how to buy my first Bitcoin. And I bought a portion of Bitcoin, and now I have a couple of Bitcoin, and it's all thanks to Charlie. If I didn't know what the hell I was doing, I probably would have bought off some dumbass website and got scammed or whatever. Yeah. So he held my hand in the process. When did we have that first conversation, Charlie? What, 2 years ago? Almost 3 years ago?
Yeah, the end of 2019.
Yeah.
So yeah, I think you bought around like $7,000 Bitcoin basically.
Yeah,
So
yeah, I got in right around.
Damn.
I got in right around that time, man, and I remember
it
doing
was
that
during a dip too.
What was that?
Like it was during a dip too, and then you also experienced like one of the first early dips that you experienced, right? Was a 2020 Corona crash. Like, how did, like, for you specifically as somebody who is new to crypto, like, how did you feel going through the 2020 Corona crash dip, holding that Bitcoin, because it did go a couple $1,000s below your strike price of 7K?
Yeah, I mean, it was the thing is that if I had not done the consult with you and known how the market is volatile and everything, and you prepared me for this, like you told me, hey, listen, invest, a portion that you're okay with losing, and that's always stuck with me, so I've always like taken, hey, I have a little extra money, boom, I invest, throw it in there periodically, buy, and I bought in at good prices, I bought in early, like you said, and I've never had that issue. So, and then the other thing too is that, like, you guys think I'm kidding around when I say this crypto mindset. Like, you have to literally get into a mindset. You cannot be emotional with this shit, especially for you guys that are in the stock market, where you guys are used to it being fairly stable, 10% returns all the time for the past 60 years, S&P 500. Crypto's not for you, that motherfucker. You know what I mean? Like, this shit is extremely volatile. Much money can be made, but much money can be lost as well. So I think once guys can get that emotional stability and understand that the crypto market is not like the real estate market, it's not like the stock market, it's not like index funds and everything else. Because even the most risky trading in the stock market doesn't come close to the volatility of the crypto market. But a lot of money can be made in the crypto market. So Charlie really taught me that emotional temperance, and that's the importance of having people kind of hold your hand in the beginning, because this stuff can be scary in the beginning, guys. This came from a former government employee working for the feds, bro. Like, we used to arrest people that dealt with Bitcoin, so I was scared as fuck. But I knew that cryptocurrency was the future, so I was like, I got to get into this now, and I thank God I did, because and
what's comforting too, just knowing that Miguel and also Charlie are invested as well. So if they lose, I lose as well. So it's like hand in hand. So they want to win. So I know they want to win. That's important.
Yeah.
Anything we talk about, we have money in.
Yeah.
So it's like, we really got our money where our mouth is. But just to go back to your original question, like, Fresh. So if you were like a new person and didn't know how to start, obviously you joined the course. But from there, I would pretty much get you started on either Coinbase, Kraken, Gemini, one of the major exchanges here in the United States, and then start having you dollar cost average every week. Like, if you have $1,000, right, or $10,000, I would have you do like $1,000 of Ethereum or BTC. I would rather have you do Ethereum because I think there's a little more upside, but Bitcoin's fine as well. And even at these prices, because like, even now you can put $1,000 into Ethereum over the next month. If we get a really bad rate increase from the Federal Reserve, like if we get like 1% or 1.25% increase from the Fed, Ethereum can still go down 50%. But it doesn't matter, because Ethereum's all-time high was $5,000. So even buying at $1,500, $1,300, $1,200, $900, $1,000, you're locking in a bunch of basically X's that Ethereum can get back to in the next year or two. So it's kind of crazy. So it's like you put $1,000 now, and you're pretty much locking in about $5,000 to $4,000 in the next 2 years. So every time, so that's the way what we tell the students all the time is like, for every $100 you're putting into crypto, you're gonna be pulling out. And this isn't the safest stuff. You're pulling out something like $500 to $1,000 on every $100 bill you put in now. Later on, that $100 bill gets you less multiples on the less risky part of crypto. But then from there, that's why people start going on crazier on the risk curve later on in the bull market. That's why people start throwing money into altcoins, because then they can get the fast money again. But right now, the main cryptos, something like Bitcoin, Ethereum, Hex, some of the main cryptocurrencies are at such a point right now that they're the gains you can lock in right now, or it's like you're getting into the fast crypto. Right now is something I call it's the accumulation zone, but it's also something the asymmetrical zone. You're making an asymmetrical bet right now. The downside is basically you can turn your dollar into 50 cents, but that dollar can turn to $10.
Right.
That's the crazy part. In the future, then you have to go. The risk is you put $1. Like, let's just say 2-3 years from now, you put $1 into crypto, and that dollar could turn into 10 cents, 5 cents. And has a chance to go to $3. So right now it's like the asymmetrical bet is just the odds are so in your favor right now that all you got to do is have the crypto mindset and the forethought to, what, I'm gonna put this money here, I don't need it for the next year or two, and then you're able to lock in a ton of profits.
So from what you're saying, Miguel, is basically yes, there's a market increase going up or down. However, at the same time, come into it the mindset of, I'm gonna buy and hold, but at the same time use money that I don't need per se to put into it. So if all else fails, at least I have the money there that I don't need. But if it wins, I get double, triple, even quadruple my money.
Right.
So okay.
So I was taking some quick notes while we were going through this, because I think because as I was thinking back to like how Charlie coached me in the beginning, there's 4 things that for me as a crypto beginner that worked for me, someone that didn't know too much about crypto that got in. Number 1, you need a mentor. Okay, you need someone that knows a lot more about this shit than you do. You know, there's a reason why we keep bringing Miguel and Charlie on, guys, and you don't see us really deal with any other crypto guys, because I trust these guys. They've made a bunch of millionaires. I run a 6-figure crypto portfolio myself based off of just a little bit of knowledge that I have from what Charlie and Miguel taught me. And to be honest with you, I text them before I make any really big purchases. Okay, that's number 1. Get a mentor. Number 2, invest in safe coins, right? BTC, Ethereum, fairly safe. There's some other coins in there as well, but those are like, the 2 main staple coins, right? Yeah. Then number 3, I treat it like for a normie, right? Because a lot of normies coming into cryptocurrency, they're like, oh shit, how do I treat it? I just treat it as like kind of a high interest savings account is how I look at it. Because if you put your money in the bank and you put it in a savings account, you're losing money. What? You put in a Bank of America account, a Chase account, whatever it may be, Wells Fargo, even you put in a fucking Alley Bank. What are you going to get? 0.001% interest rate? Yeah. Maybe at an Alley Bank, maybe a 1.51% interest rate. These high yield interest bank accounts now are trash. They're not even giving you 2% returns anymore annually, which is garbage in the first place. So with the crypto, I look at it like a high performance savings account. Yeah. Then number 4, which you guys were just discussing, is you got to buy and hold, man, and look a little bit more long term. If you're looking to buy these, shitty ass coins and get a quick flip or whatever, more than likely you're going to lose. So invest long term, and then on top of that, don't invest anything you're not willing to lose as well. Right. I think if you have these 4 components into your crypto investing mindset, it's as a beginner, you'll be a lot safer. As a beginner, as you get more advanced, right? Like Miguel and Charlie, you know what the hell you're doing. But for a basic person that's just getting into this shit, this is what served me well. Number 1, get a mentor, right? Charlie and Miguel are fantastic. They've made a bunch of crypto millionaires. I'm running a 6-figure portfolio thanks to these guys. Number 2, invest in safer, stabler coins. Your BTC, ETH are fantastic options. Number 3, treat it as like a high interest savings account. Helps you give you kind of peace of mind for a lot of you guys that like to hold money in a traditional bank. And then number 4, buy and hold. Yep. Hold on to it long term, and and don't invest anything you're not willing to lose.
Right. Well said. Yeah, and on the last point, this is why I call myself dollar cost crypto, right? Is that you dollar cost average. So something I'd recommend for a person that's just getting into the crypto space and they all right, I know I want to buy Ethereum, cool, but you forget sometimes, or you get emotional. The way you can do it is if you know how you get paid, you know how to dollar cost average. So if you get paid every 2 weeks, all you do is set, okay, I get paid on Friday, so on Saturday morning it will charge my account $100 or $200. So you can kind of set it in a way where set it and forget it, where you can just be accumulating, and then you literally forget sometimes, like, oh wow, and then you look back and like, oh cool, I've actually invested $800 this month. Yeah, and I bought at great prices. And this is how you can accumulate on money, because it's like, if you're not paying attention, if you set up the system now, you'll be surprised later on, because you'll be able to save much more money than you actually could by yourself. Because a lot of people in America have a savings problem, or don't know how to really allocate into anything and stuff. It's either all in or not in at all.
You know what happens? You get your paycheck, right? Right. You pay your bills, and you know what? I got money left over. Let's party. It's the weekend. Yeah. You go buy 4 drinks. That's $100 right there. Yeah. Before you know it, oh man, where's the next paycheck? When you could have did what you just said, dollar average cost, right? Yeah. What do you call it again?
Dollar cost crypto. Dollar cost average, yeah.
Right. Dollar cost average. And take the money out beforehand so you don't lose it doing dumb stuff.
If you enjoyed this deep dive into cryptocurrency with Myron, Fresh, Charlie, and Miguel, don't miss our previous crypto podcasts. Hit subscribe now for a treasure trove of insight from the industry's best. Stay informed, stay ahead. With FreshandFit Moneyclips, Myron, Fresh, and their phenomenal guests await you on the FreshandFit podcast. Subscribe for more exclusive content and elevate your crypto knowledge. Push it to the limit.